Today is Monday, April 7th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, Alan Bush, ADMIS Senior Financial Economist, and Mark Bowman, ADMIS Senior Market Research Analyst. Starting with the financial markets this morning, Alan. Yep. We're all aware of the action the past few days in the stock indexes, but from a technical perspective, there are some gaps on the charts. Are these gaps lower, the gaps that are lower for the S&P 500, the NASDAQ, and the Dow futures, exhaustion gaps or continuation gaps? And what do they mean?
Okay, well, first of all, an exhaustion gap often comes at the end of a move, and continuation is often a gap that continues a pattern and sometimes comes at the middle of a move. So I'm inclined to believe that the gaps down this morning were exhaustion gaps. In fact, it seems more likely that is the case since all of those gaps, all three gaps, and those three indexes were all filled and prices have come back. So they appear to be exhaustion, especially with the recovery. One clue that they are exhaustion is the very heavy volume and the very large trading ranges, not to mention the extreme volatility. Also, the very negative news that we have heard as of late. All of those are consistent with an exhaustion gap and not continuation. So when this market does bottom, I suspect it will be a V bottom pattern. I'm not saying we're there yet, but a lot of indications are that such an extreme move that we are seeing may be near its end with so much negative news, chart patterns so much on the bearish side. So I'm going with the possibility that we are not that far from making lows.
Let's hope so, Alan. And Alan, one more question for you. Is the outlook for Federal Reserve policy going to change in light of prospects of a weakening global economy and stock index futures?
Well, oddly enough, I have seen breaks of this magnitude in the stock index futures that prompted an emergency rate cut from the Fed. Nobody's saying that now. There seems to be no indication of that. In fact, it appears that the Fed will not be cutting at the May meeting. Although there was a couple of hours ago a small chance that they could cut at the May meeting, that has pulled back. Now looks like the next cut will be at the June meeting, followed by 3 more cuts. So with the Fed funds rate now at 4.25 to 4.5, it appears that there will probably be 4 25 basis point cuts coming this year, with the first one in June.
Thanks. So I'm Mark Soderberg. The ag space seem to be separating themselves from what's been going on around it. Why is that?
Yeah, prices across the ag space have, for the most part, been able to shake off the lower start from overnight. Bean oil still a little bit lower, and I think that's largely in line with the lower energy prices. But away from tariffs, there's a lot going on in the ag space right now. Otherwise, here in the U.S., been very disruptive with heavy rains across the southern Midwest and northern Delta region this past week. Large areas of Arkansas, western Tennessee, Kentucky, they picked up over 10 inches of rain in a lot of these areas. So that these areas are usually planting corn here this first week of April. So needless to say, planting delays will be widespread, and several fields that were planted will have to replant because of the flooding. In addition, temperatures across the plain states, they did dip down below 20 degrees this past weekend. Well, widespread damage is probably not likely. These temperatures are certainly not what you would expect this time of year as the crop is starting to come out of dormancy. And you couple that with the fact that forecasts really have very little to no rain over the next 7 to 10 days. Right now, it's getting harder and harder for me to expect trendline yields here for winter wheat. And that's on top of the acreage report last week, where they came in just over 1 million acres below expectations. So when you look at the Commitment of Traders report, speculative traders, they're very heavily short wheat again across all 3 classes, Chicago, Kansas City, and Minneapolis combined. They're short just over 186,000 contracts, and that's very close to the record short of 198, that back in December of 23. So while global corn and soybean stocks are tight, not so much in soybeans. Lower acres here this year do provide less wiggle room if yields are below trendline yields in this coming 2025 growing season. That's something that not going to be impacted by tariffs.
Mark, do you think the ag market focus will focus away from tariff talk later this week with the April USDA WASD report?
I sure hope so. Right now, it just appears the markets are just responding to each and every headline or rumor, and it's creating a tremendous amount of chaos and volatility. The USDA WASD report in April is typically not a big market mover, but under this current climate, who knows? I expect corn exports will still increase 25 million bushels, bringing ending stocks down 25 to 1.15 billion bushels. That's about 250 million below a year ago. And that's pretty much in line with the average trade guess, that according to Reuters and Bloomberg. I look for no change in beans ending stocks holding steady at 380. I do look for a shift away from soybean oil usage for biofuels and into exports. Exports have been off the charts high, and we've seen a big contraction in biofuel production. I've got wheat ending stocks increasing 15 million bushels to 834 million, slightly above the average trade guess. Only change in production I have in South America is a 2 million metric ton increase in Brazilian soybeans, that up to 171 million metric tons.
Thanks, Mark. Mark Bowman, will the tariffs have a material impact on the soft markets, particularly coffee and cotton?
So, U.S. is the world's largest consumer of coffee. No surprise there. And there is talk that domestic prices could see double-digit increases with these new tariffs. Vietnam facing 46% tariffs. They're actually the third largest supplier of coffee to the U.S. It's mostly Robusta, which is used for instant coffee and the canned coffee goods. And of course, there's all these concerns about demand overall. Now, this comes in light of the fact that coffee prices reached all-time highs in February. So it does leave the market exposed to concerns about lower demand, especially with these prices having reached so high as they were. Brazil's crop's still on the bubble a bit after unfavorable conditions both this year and last. Some forecasters are starting to pull back from their worst estimates, but still in all, you wonder whether the market has already taken all that into account. And also watching the weather in Brazil, getting a little better rain coverage over the weekend, maybe leaving a short-term improvement in crop soil conditions, but there may have only been a temporary change, still more dry weather to return this week. And also we had a technical breakdown, but from a descending triangle formation from the top, which is also could be an indicator of major top. So the tariffs adding on to what is already concerns about high prices and worries about demand. Oh, I'm sorry, in the cotton market too. Vietnam has been one of the biggest buyers of cotton in the last couple of years. So these tariffs do invite retaliation. Also, it suggests they may join China in switching their purchases of cotton to Brazil. Vietnam's commitments this year for 24-25, 2.3 million bales, and they're the biggest buyer. Pakistan close behind at 2.2 million, Turkey at 1.4 million, and China at 707,000 bales. Now, they announced those tariffs last week against U.S. goods, but again, their purchases have slowed considerably in the recent years. On top of that, Mark mentioned the heavy rains reaching the Delta last week. So after prices went to like their lowest levels in 4 years on Friday, they've bounced back quite a bit today because there's not a lot of cushion built in either in the price, especially with already plantings expected to be down this year.
Thank you all. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.